Okay, next on our list is accrued expenses. Now, when we move to accruals, we switch a little bit, right? Deferrals, both deferred expenses and deferred revenue, was one thing that turns into another thing. Very different with accruals, because accruals means that we're bringing something in. So it's not one thing that turns into something else. It's something that we haven't recognized that we are going to recognize through the accrual process, right? So it's not one thing turning into something else. It's recognizing things that we haven't recognized yet, okay? I think the slickest way to do that is to go through an example. So let's say we got a payday, right? And we got a whole week, Monday, Tuesday, Wednesday, Thursday, and Friday, right? Friday we'll say is payday. Payday is $1,000, right? Payday, I pay $1,000 to my employees for this particular work week, right? Now, if it's any normal week, we would just do what? We'd debit wage expense and we'd credit cash, and it would be all good, right? The problem here is what happens if Wednesday is the end of the accounting period, right? That means that I have 2 accounting periods during this week, right? We'll say that's 12/31/16. So then I have what? 2016 and 2017, right? So this $1,000 that I'm paying on Friday, which would be January 1st, January 2nd, right? I'm paying on January 2nd. Some of that expense belongs back in 2016. So when we get to the end of the accounting period, 12/31/16, I need to do an adjusting journal entry to accrue the wages that were earned on Monday, Tuesday, and Wednesday, right? So if it's $1,000 for the whole week, we know that that's what, $200 a day, right? $200 a day. So I need to bring in what? $600 worth of wages. So on 12/31/16, I do an adjusting journal entry, and I recognize that in December we had wage expense of $600, right? Now, as of December 31st, I haven't paid that yet, so we still owe it. So credit is to wages payable, $600, right? So now we've done what? We have accrued these wages, right? This little piece of business right there, that's our adjusting journal entry that brings our accounts up to date and matches revenue and expenses, right? Now this expense, this $600, is going to show when? On these 12/31/16 financial statements, even though we haven't paid it as of that date, right? Also, in my balance sheet for that day, we're going to show that we owe our employees $600, right? So when we talk about accrued expenses, it's going to look the same every time. It's going to be a debit to an expense account and a credit to a liability, because we're bringing in things that we haven't paid yet, right? So here's another little example, right? It's pretty simple. So again, I have a year, 2016 and 2017, right? And in December 15th, right, I make a payment on my loan, right? And I don't have to make another one till January 15th, right? This would be what, 12/31. So what happens when I owe money, right? It's going to accrue interest, right? So I'm going to owe interest from this period, from the 15th of December until I pay it in the 15th of January, right? But as of the 31st of December, I would owe that interest, but I wouldn't have paid it, right? Say that interest for this whole period, $100, right? $100 in interest for that whole period. That means what? 50 of it belongs here and 50 of it belongs here. I need to accrue that $50 in expense, right? So again, I do an adjusting journal entry last day of the accounting period, right? Interest, expense, and interest payable, right, for $50. So that matches that expense to 2016 when it belongs, right? I won't have to pay that till way out here, and when I pay that, I'll just do what? Pay the payable, right? So what did I do? I accrued an expense, debited an expense account, credited a payable account, income statement account, and a balance sheet account, right? And remember, no adjusting entry ever affects cash, right? No matter what kind it is. So that is a brief demonstration of accrued expenses. Remember, accrued, we bring things in.